The banking tsunamis continue to ripple across the globe as governments around the world try to patch together the broken system with band aids and bubblegum. The federal funds rate has gone up from 0.25% to 4.75% since January of 2021, meaning that the interest rate has increased by 4.5%, but it has gone up by 1,800% of what it was before. This is the fastest increase in history, and never before has the Fed raised interest rates so drastically from such a low level. This is why the banks are collapsing, and we're starting to see some pretty crazy things happening in the system. But meanwhile, Bitcoin has seen a pump of nearly 70% so far this year. You may have even heard that somebody placed a $2 million bet that Bitcoin would reach $1 million in the next 90 days. And while this is absolutely insane and is definitely not going to happen, we don't want it to happen anyway, because if it did, then Bitcoin, while it may be worth $1 million wouldn't be able to buy you really much of anything. But that's not to say that we're not going to be seeing some gains, because there's a lot of liquidity that's been pouring back into the markets. Right here we have a chart of the Fed's balance sheet, and as you can see, it has increased by about $300 billion in the past week or so, erasing all of the progress that they've made for about the past 4 months. A lot of people have been saying that this isn't quantitative easing because it's going into the banks and not directly to the public, but this money has to come from somewhere, and they're just printing it. This is devaluing the denominator being the dollar, and meaning that inflation is going to continue, and they're not getting it down to 2%. At the same time, as you may have heard, Credit Suisse was supposed to borrow about $54 billion from the Swiss Central Bank, but that just wasn't enough, because as you can see, we got news today that UBS has bought Credit Suisse for about $3.2 billion. But don't worry, because that's not going to be the only bank to collapse, or the last one either. More than 186 U.S. banks are well positioned to collapse, according to this article by Cointelegraph. And to deal with this issue, the Fed has put together a new backstop that has a scope to inject as much as $2 trillion into the system. And if that's not enough, don't worry, because it's not just here in America. China has recently made a surprise rate cut to boost their banking liquidity and their economy, because they've just reopened from the COVID crisis, and they're just trying to get ahead of the game. And like I've said many times in the past, it's not just that the Fed can't get inflation down to 2% because the government's not going to stop spending anyway. According to this article by Reason, the president aspires to spend around $6.9 trillion next year and $10 trillion by 2033. Apparently, he hopes to raise taxes by about $4.7 trillion over the next 10 years. But that's not even going to be a drop in the bucket, and we're definitely going to have to print money, because if they keep spending $6.9 trillion a year and the national debt is already $31 trillion, then how are we going to service that debt with interest rates being at 5% or higher? And with us supposedly heading into a global recession, there's no way that they're going to be able to raise taxes, because like I've said so many times in the past, taxes have to actually come from profits somewhere, and with the global economy slowing down, we're not making more money than we were last year, so we can't bring in more taxes. So this is going to lead people to rush out of the dollar and into hard assets like stocks or cryptocurrencies that are decentralized, and maybe even gold. But it's not just governments around the world that have been printing money, it's also the earth apparently, because as this article by The Citizen says, China has discovered a huge gold deposit around $3 trillion. So that's $3 trillion that has just been added to the supply of gold, meaning that each ounce of gold around the world has just dropped in value proportionally. This hasn't showed up in the charts yet because it hasn't been dug out of the ground, obviously, but it is there, and it definitely should come into consideration whenever you consider how much an ounce of gold should be worth. This can't happen with Bitcoin, though, because Bitcoin has a cap of 21 million coins, obviously, and no more than that can be created or found in the dirt or anything like that. So as the government continues to print and more gold becomes available all the time, I do believe that Bitcoin is going to continue making higher highs in the long run, and it's really going to be the only way to escape the traditional finance system. In the short term, though, as you can see looking at this chart on the 4-hour, we do have a possible bearish divergence that's forming here with these lower highs on the RSI and these higher highs here on the price, and a possible rising wedge, which is a bearish indicator with about a 10% failure rate and a price target of the bottom of the wedge. This would bring us down to the 50% Fibonacci level, at about $24,000, which would bring us below $25,000, causing a lot of people to panic, but it would only be a decline of about 15% from the high that we've just seen. I think this would be a healthy retracement, and it probably would be a time for a cool off anyway. And with people thinking that the Fed might actually do a pause, if we do see them do a 25 basis point hike, which is actually probably to be expected, then this could be enough to send us down for a short-term retracement, which, like I said, would be healthy to do anyway. However, this doesn't mean that we're going to stop going to the upside from here because, like I said, the government's probably going to continue spending money as they always do, and that means that they're going to continue devaluing the dollar, and Bitcoin is going to continue to rise. Especially since we have the debt ceiling limit deadline coming up in July, and we're going to have to raise the debt ceiling, obviously, or we're going to default on our debts. This is coinciding pretty much perfectly with this article by Cointelegraph that says that the Federal Reserve confirms a July launch for its FedNow instant payment service, which is the CBDC. This, along with the banks collapsing and the economy falling into a hole, could be a perfect excuse for the Fed to roll out this CBDC and for people to actually adopt it. That's a pretty terrifying thought, and it's actually a scary coincidence that all of these things seem to be lining up at the same time in July. It's almost like it's all part of the plan. Let me know what you guys think in the comments. Either way, thank you guys so much for watching. I hope you have a wonderful day, and I'll see you next time. Bye. This is Abisu. He's named after one of the 7 lucky gods of Japan. According to legend, he will bring wealth and prosperity to anybody who evokes his name. So don't forget to write his name in the comments, or you'll bring dishonor to your whole portfolio. And check out this video right here. Say goodbye, Abisu.